Okay, so the Volatility 75 strategy I want to share with us is going to be on 15 minutes time frame. It is better in 15 minutes time frame, and there is a set of indicators we are going to use for this strategy. It's a scalping strategy. It's not for long-term trade. And it's a general strategy I want to share with everyone. That is why I'm bringing it to the main group.
So who prepared that?
Okay, before we
Oh
start,
yeah.
I just want to explain something to us. Uh, the market we know moves in a series of higher highs and higher lows for an uptrend.
No.
So once we have been able to identify higher highs and higher lows, we can confirm that the market is an uptrend. So from here, we have market move to this level, retraces down and broke above this resistant level, and retraces down, broke above this level as well. So with this, we confirm that the market is making higher highs. Then for a downtrend, we'll be having something like this, where price, after breaking market structure, so here there's a break in market structure. Market broke below this low and starts to move downward. So when we begin to see a series of lower highs and lower lows, we can confirm that the market has changed to a downtrend. So when this is happening, we are to buy, we are to sell, sorry. Then when we see this, we are to buy. So this strategy is going to be based on higher highs and higher lows. So before we buy, we must ensure that a higher high has been taken out. So on the retracement, then we take a buy. And our target will be the next high, higher high. Then for a sell, we must ensure that a lower low has been taken out, and on the retracement, we place a sell. And our target will now be the current lower low, and just like that. So let's go over to the chart so that we'll use the chart to explain. All right, so this is a 15 minutes time frame. I will explain the indicators we are using for this strategy. The first one is the moving average, exponential moving average 200. Shift 0, the method exponential, apply to close. Then you can use any of any choice of your color, any color of your choice. Then pick OK. That is the only moving average we're going to be using on the main chart. Then the next indicator is the MACD. So the MACD, the fast EMA is going to be 3. The MACD SMA is 1. And the slow EMA is 9. So so you apply to high. Then the main color is going to be none. We don't want to see the bars. So we'll make it none. Then the signature line should be red. And levels, we only need the 0 level. Then you click OK. Then we have this stochastic oscillator. Here, the parameters, the percentage K period is 14, percentage D period is 3, and the slowing is 3. Then price field low and high. Then the main colors blue and the signal line is red. You click OK. Then before that, the levels, we're going to be using 80 and 20. So the 80 will be for the overbought and the 20 is the oversold. You click OK. So you will have your chart like this. So what are we looking for? We want to see price above the 200 exponential moving average before we buy. And we want to see price below the 200 exponential moving average for a sell. So let me go back a bit. Okay, let's start from here. So once price has moved below the 200 exponential moving average, we are waiting for price to retrace closer to the 200 exponential moving average. It can touch it, price can break through it, price can close above it, but we don't want a full candle plus the wick to be above it. Once that has happened, we cannot sell like this. Once a full candle, we have so many candles above the 200 already, we are not going to sell here. We're only going to sell when there is a retracement below the 200 exponential moving average. And what are we looking for? When price is retracing, we're waiting for the stochastic oscillator to get to the overbought level, which is this level. And once price has gotten to that level, we'll also ensure that here, this which is a lower high, is not taken out on the retracement. The previous lower high is not taken out, so that we can maintain our lower low, lower low continuously. So from here, we have a lower low, we have a lower high, a lower low here, and a lower high. Then we now have this lower low. So the next lower high should not be above the previous lower low. Once that has happened, it means market structure has been broken. So on this retracement, we ensure price has not taken out this lower low. And our stochastic oscillator is on the overbought level, at the overbought level. Then we also have our MACD line above the 0 level. So when are we going to take the entry? Is when the MACD line touches the 0 line. Once it breaks the 0 line, that is where I put this vertical line. You take your sell entry. So you are going to sell here at this bearish candle. So your stop loss is going to be on the swing high. Entry on this candle. So this is a scalping strategy. So you take your entry at this candle and the close of the bearish candle once price has breached the 0 line of the MACD. Then your take profit, your final take profit should be the swing low. So your take profit should be this swing low, which is a lower low before this retracement. That is where your take profit will be, your final take profit. So before then, you can take your profit with 1:1 risk to reward ratio. So this will be your first take profit. Then your final take profit. will be on the swing low. So you can take 2 entries, you can take multiple entries, but ensure your first take profit is the size of your stop loss. So you take your first take profit here. Your final take profit, which is the main take profit, will be on this swing high. So you can use here, or you can use this retest as your take profit. So you wait for another retracement. Now, before you take another entry, like look at this retracement, price retraced, did not take out this swing high. Our stochastic oscillator got to the overbought level, but we will not take this trade because when this price moved down to this area, it didn't break this lower low to create a new lower low. So that means the structure of the market is no longer the same. So, and as you can see, market began to consolidate in this area until it broke above the 200 EMA. So if this traded and break above or below the swing low, which is a lower low, we cannot be confident to take another trade if we have a retracement back to this region. So you wait for another opportunity. Now price traded above there. There was a retracement to the exponential moving average. Price got to our oversold level of the stochastic oscillator, but the MACD signal line did not go back to breach the zero level. So there's no entry here. So wait for this one. Price has crossed below here. We want a retracement that will go close to the 200 exponential moving average, making our stochastic oscillator to enter the overbought a region. Then when the signal line of the MACD breach the zero line, we take our entry, but that did not happen. So the next setup we have here is this. Price crossed above the 200 exponential moving average. What are we looking for? A buy opportunity. Price retrace. And meanwhile, remember, I said we must confirm the trend. The previous swing high has been taken out. So we now have a higher high here. It took out this high, a higher high. So the retracement is a lower high. And we have a swing. We can't consider this as a lower high because price has not taken out this high already. So at this point, this is a retracement. We see our stochastic oscillator at the oversold region. We'll wait for the MACD signal line to break the zero line. As soon as that happens, we take our buy entry at this candle. Your stop loss is going to be here. Your take profit is the higher high level. So once you get here, you can take your profit, or you use 1-to-1 risk to reward ratio. So, but if you feel you can still hold this trade, as soon as your the take profit is hit, you can bring your stop loss to your entry level. And if they don't take it out, it will continue to move on and ride on like that. So the next one we have here is this. Price retraced here, but price did not get oversold. And here, price retraced to the oversold region of the stochastic oscillator. And if you look at our previous swing high, the higher high has been taken out. So this is a good opportunity to buy. So what are you waiting for? You wait for price for MACD signal line to break the zero line. As soon as that happens, you take your entry. So you'll be taking your entry here, your stop loss will be here. So take profits 1-to-1, or you aim at your swing high. And as you see, you can see price hit it, and that is it. The next one we have here, look at this point. Price retraces downward. We have our stochastic at the oversold region level. But look at here, the previous swing low, which is a lower low, was broken. So because of this, we cannot take the entry. We cannot take the entry. So we don't want the previous swing low to be taken out. If price takes it out, it means market has broken the structure. So we are not sure if price will get to this level. So that is why we cannot take this one. Then we'll move over to the next one, which is this. If you look at this point, this high was taken out. A higher high. From here, it was taken out. And when price retraced to the downside, our lower low was not taken out. This is the lower low. Price did not get to it. And we have our stochastic at the oversold level. We are waiting for the MACD signal line to break the zero line. As soon as that happens, you take your entry at this point. This is your stop loss. Your take profit 1-to-1, or you wait for price to get to the higher high, and that is it. Then we get to this level. Here, the higher high was taken out and price retraced to the 200. And what happened here? It breaks our lower low. Price closed below the lower low. So you are not sure if price will get to this high. But look at what happened here. I would like you to study this strategy very well after the training. I'll post the video on the group. Now look at what happened here. After this point, price moved up and came back to the 200 exponential moving average, close below it, but a full candle is not below. I told you the only reason we will not trade from the 200 exponential moving average is when there is a full candle that is plus a wick below the 200 exponential moving average. So what happened here? Price created this low, and look at the stochastic oscillator. We have a low here, we have a high here. So this is a divergence. The indicator is giving us a lower, a higher high and a higher low, but here the price is giving us a lower low and a lower high. So this one, this low here is lower, and this one is lower while here is higher, so creating a divergence. So at this point, when price breaks, when the MACD signal line breaks the zero line, you can take an entry. So your entry will be here. Sorry. So your entry will be at this candle. Stop loss here, then take profits 1-to-1 or the previous higher high. And you can see that one moved very well. So with this alone, we will not take the trade. But because we have a divergence at this point with the MACD had it and the stochastic also had it, that is why we'll be able to take this trade. and we'll take our profit here. So let's look for some sell trade. So look at this one. Price has crossed below the 200 and this lower low has been taken out. Price retraced to the 200. A full candle is not above it, so we can take this. So stochastic oscillator at the overbought region, and MACD signal line breaks the zero line. You take your entry. Take your entry here, and your stop loss here, your entry at this candle. So your take profits 1-to-1 risk to reward ratio, or you wait for the swing low. But after hitting this one, price will not get to this one. So once price hits this, your 1-to-1 risk to reward ratio, you can move your stop loss to break even so that you will not be taken out. So if you use this, you will gain it. But if you were waiting for this, price will retrace back and take you out here. Another setup is here. Price is below the 200 exponential moving average. The retracement to the 200 exponential moving average. No full candle closes above it, so it is safe. And our previous swing low has been taken out. So this is the swing high, previous swing high. Sorry, this has been taken out, so it may not be safe for you to take this trade unless you want to risk it. So this is not a good setup. We have this. The previous low has been taken out. Price retrace to overbought level of the stochastic. You are waiting for MACD line to break the zero line, MACD signal line to break the zero level. As soon as that happens, you take your entry. Stop loss will be here and your entry will be at this point. Your take profit 1-to-1, or you use the swing high. And you get here, if you put your take profit here, you'll be taking out the profit here, or you wait for this one and you'll be in profit. So that is the strategy on the M15 time frame. Is very easy. It's a scalping strategy and it's going to pay you a lot if you take your time to study it and follow the route. Look at this. It's another entry, profitable. Your trade will hardly hit stop loss. This is another sell entry. This is another one, but very short profit, but it doesn't matter, we are scalping. This is another one. So please remember, when price retrace, when there is a retracement, we don't want the swing higher to be taken out, which is a lower high. And we want to ensure that before price retrace from this level, the lower low has been taken out. So we want to see lower lows and lower highs before we take the trade for a sell, and higher lows and higher highs. For those of us who join us, who are just joining, when I post the video, you can watch it from the beginning to see the setup, the setting of the indicators, and the rules we need to follow to take this trade. This is another entry, this is another entry, this is an entry, this is a buy entry, and just like that. This one was yesterday, and today, I saw this trade this morning, but this low was taken out. And when this retracement happened, there was no divergence. I saw a divergence here. I would have taken this buy when the MACD line breaks above the zero level. But what happened here? See an entry. This is the previous swing high. Price took it out. And when price retrace, we have, this is a swing low. We have a lower high, a higher low. And what happened here? Price can retrace, but could not get to this low. And we have our stochastic at the oversold level. Then we are waiting for MACD line to break the zero line, which it did here. As soon as that happens, you take your entry at this point. Your stop loss will be here. This is your stop loss. Then your take profit 1-to-1 risk to reward ratio. If you want to still hold, see the trade move very well. So your take profit will be here. You will use this swing high, or you use 1-to-1 risk to reward ratio, and that is how this trade went. I didn't see this. I was busy with something else. I would have taken this trade. So that is how this strategy works. It's very simple and very straight to the point. Just take your time to practice it, and if it works for you, you can apply it and use it to make some good profits in Volatility 75. All right, thank you very much for joining. And I'll be posting the video in the Telegram group and as well as the YouTube channel. Please watch the video, like and subscribe to the channel if you have not done so, and also share this video with others so that they can come and learn some good strategy that can make them have profits in the forex and volatility trading. All right, thank you very much for joining.